to Q1FY22 post-results conference call of Nitin Spindle, hosted by Smith Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. So over to Mr. Avnish Chandra from Smith Limited. Thank you, and over to you, sir.
Thank you, Margaret. Good afternoon, everyone. On behalf of Smith Limited, I welcome you all to Q1 FY22 conference call of Nitin Spindle. We are pleased to host the senior management of the company. Today we have with us Mr. Dinesh Nolka, Managing Director of the company, and Mr. P. Maheshwari, Chief Financial Officer of the company. We will start the call with initial commentary on results, and then we will open the floor for question and answer. Now I hand over the call to Mr. Nolka, Managing Director. Over to you, Dinesh sir.
Thank you. Good afternoon to everyone, and thank you for joining us on Q1 FY22 earnings call of our company. I hope you and your dear ones are keeping well and safe in this unprecedented time. I hope you had a chance to look at our results and presentation uploaded on the stock exchanges and company's website. Along with me on call, I have Mr. P. Maheshwari, the Chief Financial Officer. Let me first give you a brief about the industry and company, and then Mr. Maheshwari will take you through the financial highlights of the quarter gone by. During this quarter, with the emergence of second wave of pandemic, entire country witnessed disruptions. The second wave has impacted severely to the retail segment of the textile industry. Domestic activities were impacted due to lockdown imposed by the local government at multiple locations. However, the industrial activities were allowed as such companies which are directly or indirectly export focused could operate at normal levels. During the quarter, cotton prices initially went down and then started increasing steeply due to global usage of the cotton, and then in India, exports of cotton as well. And overall demand of cotton yarn remained pretty good in export market, which enabled us to utilize the spinning capacity in full capacity and achieve better profitability. Nitin Spindle, as you are aware, is the leading manufacturer of cotton yarn, blended yarn, knitted fabrics, and woven finished fabrics. The company's leadership in cotton and blended yarn fabrics manufacturing is driven by its continuous investment in latest technologies, resulting in delivering standard quality products. And due to our strategic focus, proper product mix, and large presence in the international market across 50 countries, we have delivered a strong export performance in the first quarter of this year. Despite traveling restrictions, pandemic lockdowns, the customers have reposed confidence on us, and we could achieve export turnover to the total 76% of our revenue, which was about 60% in the last year, FY21. During the quarter, we have achieved higher productivity and efficient utilization of our spinning and knitting operations. However, the utilization of our woven fabric division was lower, as domestic demand was much lower due to lockdowns, and the division is mainly catering to domestic markets. However, the same was offset by higher sales of yarn and more focus on increase of sustainable fibers like organic cotton, recycled other fibers, the lycra blended yarn, and higher finer counts with very fine varieties of extra long staple cotton. We have achieved highest ever revenue and profits during the quarter. I may mention here that while analyzing the performance of the company, we would request you to look at quarter-on-quarter figures, as figures of last quarter, June 20 quarter, are comparable, since the operations during that quarter was closed for about 35 days. Now I would request Maheshwari ji to give the financial highlights for the quarter ended 30th June.
Hello. Thank you, sir. And good afternoon, everyone. And thank you for joining this earnings call. I would like to touch upon the financial highlights for the quarter ended 30th June 2021. Revenues for Q1/22 increased to rupees 554 crores from rupees 512 crores in Q4/21. That is an increase of 8% quarter-on-quarter. And year-on-year revenues were up by 153% from rupees 219 crores in June 20 to 550 crores in June 1/21. The gross margins for this quarter stood at 48.4% as compared to 45.1% in Q4/21. Gross margins have increased due to better utilization and focus on specialty products. EBITDA for the quarter stood at 129 crores as compared to rupees 104 crores in Q4/21 and rupees 24 crores in Q1/21. That is an increase of 23% on quarter-on-quarter basis. Profit before tax for the quarter is rupees 93 crores against rupees 66.44 crores in Q4/21. That's an increase of 40% quarter-on-quarter. Similarly, profit after tax is rupees 60.01 crores against rupees 42.86 crores in Q4/21. That is an increase of 40%. Cash earnings per share for the quarter is rupees 14.63 against last quarter 11.55, and earnings per share increased from rupees 7.62 in Q4/21 to rupees 10.67 during the quarter. On the operation front, the spinning capacity was fully utilized during the quarter with production of 17,719 metric tons. Knitted fabric capacity was utilized at 90% with production of 2,000 metric tons. And while weaving fabric division, production was 6.17 million meters with capacity utilization of 82%, whereas the finished fabric capacity was utilized to the extent of 61% with production of 4.57 million meters. That's all from my side. Now I open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunjan Kabra, an individual investor. Please go ahead.
Sir, thank you for the opportunity and congratulations for a good set of results. So I have a couple of questions. So first is, how are basically cotton prices governed in India? Like assuming India has abundant supply, and I believe some part of the cotton is only import dependent. So is it our demand and supply mismatch that governs the price, or is it done globally? So just wanted to understand if we are the price takers or we have our own kind of a price mechanism.
First of all, to understand this particular thing, it's a more of a macro aspect. Here we have to look at the total out of the country and switch, and then what kind of parity it is, which is also interrupted by the Government of India minimum support price operation. So here in India, first of all, the floor is decided normally by the minimum support price. The government declares every year around May or June for the next cotton crop, so that we are able to grow more and more cotton. The objective of the government is to remunerate the farmers proper. So that is one of the base prices where it operates. So whether and the prices go down, let's say, which happened in the year 2020 during pandemic time, early part of 2020 during the pandemic time. So government interrupted and bought a lot of cotton. So that is one part where the base price is determined. So normally base price is determined on the basis of the cost of the farmers, and it has nothing to do with market side of the office. This is one basic parameter which we need to look at. And then comes the global prices. Normally, we have a outlook index which is comprises of the various kinds of cotton all around the world. Also, we have some people look at New York futures. So basically, when the Indian cotton prices are normally a discount to them because of ex-Jim prices are normally a discount to them because of factors of our cotton, the quality of cotton which we are producing. So once the prices, if our prices are too low, then there is always a tendency to export the cotton out of the country because we have a free trade. There is no restriction on the export of the cotton. So normally the cotton is being. So whenever like this year, there was our prices initially were quite low. So we had exported nearly 20% of our crop out of India. Normally our supply economic dynamics at this point of time is that we require about 80% of the cotton is sufficient for our, the production is about 36 million bales. And in India, the consumption is about 331 million bales. So nearly we are self-sufficient. 5 million bales are normally exported out. So sometimes when the prices are not to that level in the international market, then this remains in the India as a buffer. Last year, in the year 2019 to 20, our prices were on a higher side, so we could not export, and that's why our opening stock was very high. This year, prices went down substantially due to pandemic, and then slowly it came back to the global level. So the pricing mechanism is intermingled with the international pricing which happens. So it is not solely dependent on in India.
Okay. Sir, also had a question regarding the sustainability of operating margins, which stood at, I think, around 20 to 23% this time. So if you can guide what factors actually helped us to keep can help us to keep our margins at this level going forward, or what factors can lead to, a decrease in margins, and are these sustainable going forward?
Yeah. Like, first of all, margins are a result of the supply and demand equilibrium. So, and during this pandemic time, both supply as well as demand both have been disrupted. On top of it, we had a huge disruption on the side of the logistics as well. So to do a crystal gazing that what kind of margins it will remain going forward in long term is I would say, like a sort of forecasting in an area where you are not an expert. Basically, we need to look at various aspects of the supply and demand which is near to us or maybe in near term. So as we can see, the supply side has been disrupted by a lot of manufacturing stoppages, which a lot of industry experts must have explained, and I have also explained in last of my phone call that there is a lot of manufacturing disruption happening. So the supply has been reduced, and that if these are not coming back at this margin level, we should not expect them to come back in the near future. And further, this can be increased by adding more capacity, which we are not seeing in a large tune in the coming at least 6 to 12 months. So that is one part. Second part is the demand part, which is actually, if you see, this has been disrupted due to lockdowns, and various products in the textiles have been retail is not open as an opening remark, that domestic retail has stopped. Also, the retail in various parts of the world has stopped. But due to happening very rampant, we are seeing players are saying very, very less. Consumption levels are slightly below the normal requirement. Okay. But in the international market, they are nearly coming back now. Recently, about 2-3 days back, a report of the advisory board is coming, which has shown cotton consumption has gone up by 12.5% from the last year. So the last cotton season in 2021, 12.5%. A reflection that the product
I'm sorry to interrupt you, Mr. Nolka, but your voice is breaking up, sir, so I'm afraid we could not hear your answer clearly.
So can you hear me now?
We can. It's just you're breaking at times. I would just request you to give me a moment while I check that. Participants are requested to please hold the line. Ladies and gentlemen, thank you for patiently waiting. We have Mr. Nolka reconnected.
Yes. Gunjan, so basically I was explaining that the demand scenario, so the nearby supply and demand side we need to look at on a regular basis. Demand is very robust and it is expected to go better only in coming time in the domestic market, which has been deeply affected by the demand side. So we expect that these kind of margins can remain for near term, maybe 1 or 2 quarters going forward. However, as you said that how we are planning to see that we have this kind of margins remaining with us. We are actually, a lot of focus is now on the sustainable fibers on our side. We are looking for a lot of, also in our blended division, blended yarn division, and also looking at a lot of recycled products. We're also looking at the organic cotton. We're also looking at various other sustainable fibers which is coming up. So this kind of product profile is in very high demand internationally as well. So by doing this, I think we should be able to maintain some of our margins. Further, a lot of cost efficiencies is being brought in. Because of pandemic, we got a lot of time to review our operations very minutely, and we could bring down a lot of our costs, which is evident in our financial results also. Our cost has been brought down. In fact, if you see our per employee efficiency has also improved. So we are looking forward to various aspects. Interest cost has also been brought down. So these are the various aspects by which we think we should be able to maintain a reasonable margin going forward. So it's better than what we had in the earlier years.
Okay. And also, sir, with from the company point of view, if you can share data regarding exports, like which country contributes how much to the export revenue, like the major ones, if you can highlight.
Like in total, our exports are about 76%, and we export, a major export is to the number one country in this particular quarter was Bangladesh, which was in the vicinity of around 30%. Then European Union, we did about 21% in the European Union as a whole. And then China was down for us. We normally do about 10%, but this quarter we did only 5%. Then Latin America had a lot of disruptions. Otherwise, there also, but still we were able to do about 7% in Latin America. USA, we were doing about 7%. So, and the African continent also we do about 7 to 8%. So it is pretty well distributed. This time some concentration happened in Bangladesh, which is not normal, but normally we have a proper distribution, and China's share actually went to Bangladesh this time.
Okay. And sir, also with expansion done in woven fabrics and other finished fabrics also, so are we looking towards export market only or domestic too, or a mix of both?
Primarily, this woven fabric business is focused towards this domestic sales. There are various brands, international. We have international and domestic brands both operating in India actually. So they have a lot of garmenting being done in India. That is eventually exported out and some is sold in India. For us, that is a domestic sales actually. So it is the prime focus is on various international brands which are working in India, and also on the domestic brands which are already selling in India. So that is the focus is more domestic oriented in this. In export, most of the this can go, since this is a fashion business. This cannot go very long distance. It has to be in the nearby vicinity areas like of Sri Lanka, Vietnam, Bangladesh, where the garmenting is rampant, so and economical as well. So these are the areas where we are looking for exports. Otherwise, more so in the domestic market.
So just one last question. When you mentioned about the export share of different countries, and now right now if US has banned Chinese cotton right now, so are we looking forward to any share of gain on that for that market? Like trying to increase in the US, or what would be the share going forward if you have planned anything of that sort?
Definitely, it is for our basically US is buying more of fabrics and garments. We have presence there in the fabric division, and that the share of our fabric business is definitely increasing in that particular market. Since earlier they used to import lots from China, but we should also note that the shift from China will some of that will be taken up by Vietnam and Bangladesh as well. So from our side, we are trying to increase our share. This share, if we go back to 2 years back, this share used to be about 3%. It has now increased to about 7%, and going forward, we are further trying to increase this up.
Okay. Sir, thank you so much for answering the questions, and all the best.
Thank you.
Thank you. The next question is from the line of Ravi Sundaram from Sundaram Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. I have two questions. First question is, now what are our plans on debt management? I know we've been having a couple of good quarters, and we expect a couple of more good quarters. Are we looking at paying down debt, or are we looking at reinvesting to increase our Capex?
First of all, at this point of time, we are looking to pay down our debt substantially. Our debt in totality, including our working capital, was about 960 crores at the beginning of this year. And we are fast forwarding some of our repayments. So we expect normally, in normal terms, our repayments are about 120 to 130 crores every year. But we expect that this year we will tone down our debts by about 240 to 250 crores.
Okay. Thank you, sir. My second question is on the capacity addition that you had mentioned due to debottlenecking in the investor deck. So I think 4% is coming up due to this debottlenecking roughly. So when in second quarter are we would this be getting commercialized?
We're just on the verge of starting it up. Some part is under trial run, and rest within this month of August we should be operational fully.
Okay. So one last question. Now Q1 had some disruptions because of lockdown in the domestic market. Now in Q2 we don't have that. So would we have a better Q2 because you have now domestic contribution also coming in? And what was the capacity utilization like in Q1?
Like in Q2, definitely our capacity utilization has improved. We have spinning, of course, we are running full stream, so there is not major scope except on this part, the debottlenecking which we are doing. So that some part will come up in this quarter. But for our woven fabric division, utilization has improved definitely. We expect better utilization in weaving and also in the processing side. Major issue which is there today is that once the markets are opening, but the retail side is still not picked up very well. We are seeing some demand coming up, but most of the demand is people are very scared of the third wave. They place the orders. The intention is to take the thing, but when it comes to delivery, they just want to watch for the third wave. That is, even in the first quarter, we had very good order book. Still, we have very good order book on our fabric side, but the deliveries are getting delayed due to this issue of, I must say, scare of third wave. So if God willing, if we do not have any third wave during this quarter, our performance will be definitely better.
Thank you very much, sir. All the very best.
Thank you.
Thank you. The next question is from the line of Naresh Kataria from MoneyFirst. Please go ahead.
Yes, thank you, sir. My question is regarding the duty benefit on Rocktech, the benefit for exports for our yarn. So has that been considered? Is there anything provisional we've considered? And if not, what should we expect as the kind of benefit which will come to us for our export sales?
First of all, we have not considered any RODTP. We have not accounted for it. In fact, we have not accounted for any MEIS benefits also of last year, which is not received by us. So that is purely on the basis when it will be announced and accrued to us. So then only we'll account for it. But as far as what we should be considering, we have been there is a consistent for last 4-5 months through our industry associations. We have been talking with various authorities and also presenting our case for the various duties, and especially cotton yarn being a produce which is being done from agriculture products where a lot of mandi taxes, state taxes, levies are being imposed. We expect a reasonable amount of benefit coming to us. This could be anywhere in the range of 1% to 2%. So let's hope for the best. I hope we have been hearing that ministry is going to announce this within this month itself.
Sure. And my second question was that you had relatively less sales in the Capex, knitted or woven. Could that part have been shifted to exports, or we can't do it at short notice?
In the knitted fabric business, we had shifted the capacity towards exports. As we are in the knitted fabric business for last 18-19 years, so we have very good market intelligence available, as well as we have customers around the world. So we can shift this. Same thing is with yarn. But in woven fabric business, we are comparatively new, and unfortunately for us, that once we commissioned this plant, it was just in the beginning of 2020, and the pandemic hit us. We could not develop our export market to the level which we have in our yarns and fabric, knitted fabric. So we had to depend on our domestic fabric business, market only. However, going forward, we are also trying to diversify our products in the export market as well.
Got it. Thank you, Doctor. My last point is on this. We are hearing a lot of this container shortage for exports. Are we experiencing anything, or I think we have come to terms and we are efficiently managing it? Is it affecting our export business at all?
Definitely, this is a very big issue. I would be wrong if I don't say that we are not affected. Definitely, there are effects to this, and however, we have more or less managed it in a reasonable manner. Some part of our inventory increase is also because of this effect, that there is a lag period of about 5 to 7 days. Various goods are lying at dock and not getting exported. Even if we are able to manage the container, there is a vessel shortages also, and the vessels are also not calling regularly. So we are trying to come to terms with them. The cost has also increased substantially due to this, because of this increase in the logistic cost of the sea freight, as well as inventories have also increased. And I think this is going to stay there for another 2 to 3 quarters.
Got it. Thanks a lot, sir. Best wishes.
Thank you.
Thank you. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Hello. Am I audible? Hello.
Yes, sir.
Yes, sir. So my question is related to the current profitability, what we are enjoying. So we saw this level in 2011, and now we are seeing the same profits So the event which happened in China, the particular region cotton is banned. So now this is going to impact the entire chain. So even the fabric which is made out of that cotton. So in terms of, would you read this as a structural change to the industry? Because there's a large quantum of cotton which has gone out from the global supply chain. So what can be done to correct this supply, or there's no way out unless that region comes back again in the market with its cotton? What is your reading?
In this, first of all, we need to understand that this cotton is not gone out. Actually, this is going to be available not for the global market but local market, but for the Chinese local market. So what we are seeing is that China is very, I would say, promoting their own cotton in their own domestic, and we see that a lot of advertisements are being put in, a lot of their stars, their movie stars, as well as their players, as well as the politicians are promoting it very aggressively. So we should not expect that this is going to be out of business completely. Now, why these margins are higher is also not only because of this Chinese cotton. There are certain measures which have changed in the overall business scenario internationally. First of all, there is an inclination of the most of the buyers worldwide to go for a China plus one strategy. Basically, people want to go for an additional supplier, so they are shunning out China and trying to do business with other countries. So that is one part of the business that is actually flowing, that is fructifying at the moment, first of all. So that is going to remain, because earlier if they were buying 85% from them, they have reduced their buying. So this is going to be there. Second part is in last few years, if you see our industry build up a reasonable capacity. Earlier, 10 years back or earlier than that, in the spinning industry, we did not have that kind of capacity to cater the international brands and the large quantity. Now India is having very good capacity, and we could cater in a very swift manner to most of the players. Also, the quality of the products have also improved substantially. So, for the Indian cotton has improved. And on top of this, for the yarn business at least, one important thing has happened is most of our competitors are now out of business. Like Vietnam, which used to be a good spinner, now is consuming its own yarn. They are in fact short of yarn, so they have to buy the yarn. Pakistan used to be again a seller of yarn, which is no longer in the market today. In fact, they are themselves buyers of yarn. They are searching for more and more yarn. So also, Indonesia per se has become less competitive because of various political issues over there, and also the price rise or inflation happening in that country. And also Turkey has become slightly uncompetitive because of a lot of political turmoil happening. So we are not left with many competitors in the yarn business in the international market. So that is also leading to improvement in the demand from the Indian yarn. And we can see the kind of export figures we are churning out every month and every quarter. This is the reason why we are able to do better in the pandemic time.
So why is Pakistan and Vietnam turned buyers?
Because they have added a lot of capacity on their downstream side. Basically in home textile, Pakistan has put a lot of capacity in the home textile. Also, they have shortage of cotton. Their cotton production is down by 15-20%, and they are dependent on import cotton. So spinning capacity is not being added majorly in that country.
So then, what can impact the profitability of the yarn division?
Basically, if we have lesser crops in India, someday, which happens every once or twice in 10 years, that Indian cotton becomes more expensive than the international cotton. We become normally we are at parity with the international cotton. So as long as we have a parity, I think the margins can remain sustainable. If they become more expensive, also in our country, if there is a lot of inflation and we see that a lot of power cost increases, a lot of wage increases. If that is going out of context, then that can also affect us. And one more major thing is happening is that the new mills which are coming are also becoming very expensive. So their production cost will be much higher than what today we have. So that is also going to cushion us for the margins going forward.
Okay. Would you think of expanding on the yarn side?
Definitely. Why not? We have been in this area, and there has been a consistent growth. In 10 years, we have done, our capacity has been, so why not going forward? We will definitely expand in this area as well.
Okay, sir. Thank you.
Thank you. The next question is from the line of Abhishek from Ken Capital. Please go ahead.
Good evening, sir. Can you hear me?
Yeah, I can hear you.
Abhishek, we lost your audio. Please confirm if you can hear us.
Yeah, I can hear.
Okay, we can hear you now. Please go ahead. Abhishek, you may go ahead with your question, please. Sorry, Abhishek, we cannot hear you.
Can you hear me now?
Yes, but your voice is breaking now.
Yep.
I would request you to check your phone lines and rejoin the queue. In the meanwhile, we'll move to the next question. The next question is from the line of Praveen Sahai from Edelweiss Financial. Please go ahead.
Yeah, hi. Thank you for taking my question. My question is
Sorry to interrupt you, Mr. Sahai. Your voice is breaking up as well. Please move to a better reception area.
Is it now better?
No, sir. It is breaking very badly. I would request you to please check your phone line and join the queue again, sir. In the meanwhile, we'll move to the next question. The next question is from the line of Ritesh Chedda from Lucky Investment Managers. Please go ahead.
Sir, this 17,000 ton of production volume that we see for the last 2 quarters, what is the capacity utilization there on the spinning side? And I just wanted to confirm your spindleage before and after this debottlenecking.
Maheshwariji, if you can highlight, please.
Hello. The utilization is more than 95% is spinning in both the quarters. And spindle capacity before this is 348,000 spindles, and we are adding 7,300 spindles right now. So it will be 307,000 spindles. And
why are we mentioning?
Hello.
Yeah. Why are we mentioning 4% then? It should be 2% addition, right?
Sir, it is not only the addition of spindleage which results in the production. There are various equipments which we load on the various different kind of machines. As we say, debottlenecking. So we add up various equipment at various parts of the machine to improve the productivity as well. So that will result in our production increasing by about 4%.
So which means that we have about 348 plus 7, which will go to 355.
No. It is 300,000 spindles. 48 is the 300,000 spindles, and this will go up to 307.
Okay. And this includes the rotors, right? If you have any rotors.
So rotors is additional to this. We have about 3,550 rotors at the moment.
Okay, 3,000. So the 17,000 ton volume that we see is including both, right? The spindles and the rotors.
Yes, exactly.
And any thumb rule, and is this thumb rule correct that one spindle produces about 250 kgs of yarn per annum? That's the thumb rule, or there is a different thumb rule?
No, there is no thumb rule, sir. It depends on the kind of pounds and the products which you are producing. You cannot identify one particular. Every mill have a different kind of count structure, the product structure. According to that, you can add up. If you go by that count, we are producing about 550, about much more than that. So we should not go by that particular count. Basically, thumb rule.
And replacement cost per spindle should be what, sir?
Depends on the kind of equipment you put in. Now it is in the range of about, at this moment, about 55 to 60,000 rupees per spindle.
Okay. Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Kirti Jain from Canada HSBC. Please go ahead.
Thanks a lot for the opportunity, sir. Sir, with regard to debottlenecking in our fabric division, when will we be able to take the decision, sir?
No, we do not have any debottlenecking in the fabric division. The fabric division is fully integrated. Our capacity is about 2.5 million meters for weaving, that's 2.5 million meters for our woven fabric. We have not been able to achieve the full capacity. So that is one part. But there is no major debottlenecking required in that particular division.
Okay. So any scope there, sir, for debottlenecking?
Yeah, of course, we do. We can increase we can go, once we are able to utilize the capacity, definitely we can improve within the same premises and within the same area. We can increase the capacity by 25-30% easily by adding few equipment.
Okay. So, sir, when will we be able to achieve, in your view, fuller utilization of our fabric division, and what can be the quarterly turnover of that?
Yeah, once we are able to, we nearly reached our capacities in the month of March of 21. We reached nearly 88-89% capacity utilization in the month of March. And as soon as this effect of pandemic is over, we should be there to utilize the capacity. We have been approved by various international brands, and we have also got through in the major domestic brands also. So we should be able to utilize our capacity to the fullest in next 2 to 3 quarters. We expect that within this year itself, we should be able to reach that level. Now coming to the top line, once we are through with this, once we reach that level, our top line from this business should be in the range of 110 to 120 crores every quarter.
Okay. And that will add extra EBITDA also, right, sir?
Of course, it is going to. There is a lot of value addition in the fabric business, so that will also be reflected.
Okay. So with the increment, with the extra profit which will be coming from the fabric division, we will be able to offset any loss if may occur due to spread contraction, right? What do you think in the H2 or in next year?
Definitely, that is. Basically, the thought process behind going into the fabric business is that once you have an integrated operation, the volatility is being taken care of. So your margins you have large margins to play. Any increase in the raw material cost or any other cost increases are being. So that definitely helps us out. So that is why we wanted that the share of our fabric business grows to a reasonable proportion going forward, so that all these volatilities of in the margin, in the cost can be taken up.
Sir, last question. Sir, we have been a fast-growing company. We have multiplied our business by 7x in 11 years, 2010 to 21. Why we are taking a route of calibration this year, sir?
Actually, this is a year of disruption. Means today, whatever we are seeing, the sales is disrupted, the production facilities have been disrupted, logistics is disrupted. So whatever we see in the near term is not, we should not base our decisions based out of just the 1 or 2 few months or let's say 1 quarter basis. Definitely being a growing company, we want to grow with the same pace as we have been growing in past 10 years or maybe even 20 years if you go. We have been growing at a consistent CAGR of about 18%. So that still we wish to grow in the same pace. But we do not want to allocate our capital to areas which may lead us to a problems or maybe overcapacity kind of things in those areas. So we are definitely we are looking for opportunities to grow. We are looking forward for we have the opportunity to grow in our spinning business easily, but we are looking for various products, with some of them which may come under PLI, so we can expand in those areas. The fabric business also, we are hearing that a lot of incentives are being offered and new products could be allowed in the fabric business as well. So that is an area where we are definitely looking forward. So it's just a pause, I would say. It is not something that we are delaying the thing. We are just wanting to go in the right direction. So it is better to wait for few, maybe 1 or 2 quarters and then decide. And then we can fast forward the whole thing, since we have the whole infrastructure available. Of course, with the kind of earnings we have also available with us the internal accruals. So we can fast forward our expansions going forward.
Sure, sir. Sir, when is the PLI expected to come, and when these winners will get finalized, sir? Any idea, sir? We're getting?
Sir, we have been, in fact, it was supposed to be finalized in the month of June. The minister has changed, and now our new minister, Mr. Piyush Goyal, is reviewing the whole thing. So it is expected any time. Once this parliament is over, we are hearing that once this parliament session is over, we should be hearing about PLI. So we hope that it is done as fast as possible. So a lot of the clarity comes in about the growth in next 5-10 years for the textiles.
Okay. So next year then we will have a single-digit growth, or how you expect the growth for next year, sir? Like fabric will be a full year fabric will be a fuller utilization of full year fabric will be a growth area. What else will be a growth opportunity for next year, sir?
Next year we are adding, as we have done some debottlenecking capacity, maybe around 4-5% capacity will come up. So this will be available to us. We are further looking at adding up few capacities in various parts of our businesses. So that will come up. So definitely in the volume terms, it may be addition in single digit only. And if in the right time we are able to get the clearance about PLI and other things, we may go in for some capacity expansion and some part in the next last quarter or something like that. But that is yet to be cleared.
Okay. So ex of PLI, what is the current year Capex and next year Capex, sir?
This year Capex is about in the range of about 35 crores. We'll be doing about, that is the Capex.
I'm sorry to interrupt, sir. We lost your audio. We cannot hear you. Ladies and gentlemen, request you to please hold the line while we check the line from Mr. Nalka. Thank you. Ladies and gentlemen, we have Mr. Nalka reconnected. Over to you, sir.
Yes, please. I think
yes, we lost you a few seconds back.
Yeah. Yes, sir. What will be the Capex for next year you're planning? Ex of PLI? That was the thing.
Apart from PLI, the routine, we will be adding some 25-30 crore rupees spending next year on the various parts of our business to add capacities as well as debottlenecking or maybe improvement in the areas of wherever cost efficiency can come in.
Okay. So cumulatively 60 crores is the Capex you are planning for next 2 years.
Yeah.
Sure, sir. My best wishes and congratulations for a great performance, sir. Thanks a lot, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yes, thank you for the opportunity. And I must appreciate the patience with which you have answered every participant's question and really educating us about the industry. I wanted to understand, sir, the interplay between the yarn prices and the cotton prices, because one would have thought that with the ban on Chinese cotton, the cotton prices would go up and the yarn margins would get squeezed. But it seems that the yarn companies are actually doing very well. So how does this relationship work?
Actually, this relationship works on the demand and supply basis. So as the Chinese cotton was banned, the demand of the yarn also improved substantially. And accordingly, that is why the cotton prices have gone up. The cotton prices would have, if you see the cotton prices about 6-8 months back, since then it has improved by about 20-25%, 22% I would say, that it has improved. And accordingly, the demand also came up. So we were also able to increase the prices of our yarn. So that is normally when the raw material prices go up, there is a limit to which you can pass on the prices. But since the demand has been good, we were able to pass on completely to our customers.
So does this mean that the yarn capacity is in balance it's not excessive, because India is supposed to have a lot of yarn capacity, right?
Yes.
So the demand supply on the yarn side seems to be balanced, right?
Actually, what happened was that in the last pandemic times, when the capacities closed up, nearly 5 to 6% capacities have permanently closed, first of all. So from supply side, these capacities were out. Then we had, normally every year we have been adding about 4 to 5% on the percent capacity on the Spindle side. So in 2020, we just added about 1% of the capacity. Even in 2021, we are expecting to add about 2.5 to 3% capacity. So the capacity addition has also slowed down. Whereas on the demand side, in last year, of course, the demand was lesser. So that was balanced by the stoppages and the capacity closures. And this year, we are seeing good demand. As I explained in my earlier remark also, that cotton consumption has gone up by 12.5% worldwide. So that is possible only when you have the existing capacity running to the full. That is being reflected in the demand in the yarn itself.
Okay. Thank you. Understood, sir. And one last question, if I may. How much is the margin increase when you go into, in forward integration in terms of fabric? How much do you earn more?
It depends on the kind of products you are making. Basically, different levels means we have knitting, we have textiles, we have woven apparel, wovens. In that also there are workwear, there is fashion. So it depends on the kind of products that any company is making. So the margin is strictly variable, because when you have a product basket, then you can spread it according to the demand. But definitely the value addition gives you some additional cushion to your margins.
But if we take some ballpark, would it be 200, 300 basis points, or would it be like 500, 600 basis point increase?
200, 300 basis points over the yarn?
Yeah, over the yarn.
Definitely it will be more than that, because 200 basis points, we would not be able to justify our capital allocation to it. So nobody will be able to do that at that particular level. So definitely it is on a higher side.
Okay. Thank you, sir. Thank you for patiently answering all the questions.
Thank you. The next question is from the line of Ravi Sundaram from Sundaram Investments. Please go ahead.
Hey, thanks for the opportunity. I think my question was covered just for the previous one. Thank you very much.
Thank you. The next question is from the line of Abhilasha Satale from Dalal and Broacha. Please go ahead.
Yeah, thank you for taking my question. Sir, basically, I just want to understand that when the new cotton crop arrives, which will be at a higher price. So, in commensurate to that, whatever the contracts we will be entering currently, or within a quarter, within this second quarter or so, are we factoring that kind of increase for the next 6 to 8 months in our cost? How do you expect yarn price to improve or to react to the new cotton? I'm not asking to give any number, but just based on your experience and past this, if you could just give us a direction in terms of how is yarn demand supply placed and with commensurate to the new cotton price increase which is expected.
Yeah. First of all, the cotton prices today are ruling at one of its highest level of last 8-10 years. And from here, we are not expecting any major price increase in the next cotton season. Next cotton season, as we all know, normally is directed by the two aspects. First is the minimum support price and secondly the international prices. So first, minimum support price in the next season would be at the level of about 43,000 or so. So which is far lower from the level which we are at the moment. And secondly, the international, we are after a long time, our cotton prices are above the international prices. The present prices are more of a speculative nature rather than the actual base of it, because most of the bigger players, most of the reasonable size mills have already covered the cotton, and very less cotton is left with Cotton Corporation as well as the various traders. So these prices are not the real measure. The real measure would be the prices which were prevailing at the end of March or early April. So from there, we are not expecting any major change. Of course, it will be lesser than what we are having at the moment. And those price means at that price point, already that is being factored in. It means the present prices would be higher and the forward prices would be lower. That is also reflected in the forward contract which is happening. So we can easily take care of our margins and also the pricing part considering that.
Okay. Sir, can you just tell us, what was the EBITDA per ton in terms of spinning for the spinning division for the quarter?
Actually, we do not calculate the EBITDA per ton basis.
You can tell me EBITDA per spindle per day. That is also fine.
That will have to be calculated. Mashuji, if you can in the meantime calculate the EBITDA per ton or EBITDA per day or let's say per spindle, that would be helpful for them.
Okay.
If you can just please calculate and tell them. Just normally we operate on the cotton yarn spread basis. So that is cotton yarn to cotton spread. That is something which normally people operate at. So
yeah, so you can also tell gross margin also. That is also fine. Even gross margin per spindle per day or gross margin per ton, anything would be okay. Yeah.
So like cotton yarn spreads in this particular quarter was in the range of 120 rupees a kg, which was earlier about 106 to 107 rupees a kg in the last quarter.
Thank you. I will ask Ms. Satale to rejoin the queue for follow-up question.
Thank you. Yeah.
Thank you. The next question is from the line of Gaurav Punjabi from IVCAP Securities Private Limited. Please go ahead.
Hi, sir. Thank you for the question. The results are really good, and just a few questions around the numbers. First thing I would just want to understand, I see a large inventory gain, obviously, which is not something which would be recurring, I'm guessing, over a span of time, which is again pushing up all the margins. Now, when I look at the cotton prices from April to June, which is when the quarter ended, there was again about 16-17% rise in the cotton prices. Now, after June to currently, if I see the current cotton prices, there's another 5 to 6% cotton prices increase. So just wanted to understand, have yarn prices moved in a similar range, and would we again see something like a massive gain on inventory side, or do you expect this to normalize over maybe a couple of quarters?
Basically, in the last quarter, our average cotton price increase was about 12.5%. And
Correct.
the yarn prices also increased to the same tune of about 12%. So they were both moving in tandem. This quarter also we are seeing, in fact, as I explained in the earlier question, that the prices which are prevalent today are more of speculative nature, especially of last 2-3 weeks have been more on the speculative side. So we should not be basing any of our inventory gains or even our pricing others on the basis of that. Normally at this point of time, normally we see how the international market is moving, and there we are seeing there is a stability of prices of the cotton look index at around 100 cents per pound, and Indian cotton prices are also in the range of about 94 to 95 cents per pound. So we do not see any major inventory gain or so during this quarter, and it has already started to normalize. Yes, of course, if you see the major inventory gains were coming in the March quarter when the prices moved very, very sharply from a very low base. So that was majorly at that point of time.
Answer. So, sir, in the long run, since we've been tracking this company and, we've seen 15 to 17% EBITDA margins, and that is where the management has always guided that this was always the long-term expected EBITDA margins, while all these inventory gains have pushed it to beyond 20%. Where do you see, obviously there is a contribution from the fabric business, etc. But if you have to see, let's say, maybe, 3 to 5 years down the line, what is the normalized EBITDA margins that you guys internally target, or if there is any sort of guidance on the margin specifically, blended margins?
Yeah. First of all, I would just like to correct you that these are not inventory gains we are getting. Basically, yarn prices are also, yarn prices are moving in the same direction of the cotton. So normally, our cotton costs are in the range of 55 to 60% range. And if they increase by 12%, that the yarn price increase should be about 7 to 8% or 9%, I would say. But in this year, this has increased to 12%. So you get a advantage, that kicker of 2-3% you get additional. That is reflected in our margins. So when the prices move in tandem, so that is the main reason for the increase in the EBITDA. Now coming to your second part of your question, where you said that what should be the average, I have again been saying this for last so many years, that the standard margins are in the range of 16-17, in the range of this level only for the yarn business. And I don't see any major reason or change in this happening unless we see some structural changes happening in next few times in the policies of our government, or also in the kind of demand scenario which is changing all around the world after pandemic. If something to that tune happens, then we may have a relook at that part of the margin side. But otherwise, it should remain at this level. And further, our fabric business should be contributing substantially going forward. We expect that 30% of our yarn will be converted into our own fabric, so the fabric will also be nearly more than 35% of our total sales, which will substantially contribute to our margin. So going forward, the stable margin levels in the long term, which we target, is about 20% level. You can say the range of 18 to 22%, that is at the kind of margin levels we expect in the normalized times.
Understood. Also, just one last question. Back in 2018-19, in fact from 16, there was a website by the government which is on the Textile Ministry, which used to give a good data on the yarn prices and the cotton prices on a monthly basis. but that seems to have stopped. They haven't updated since 2019, I guess. Any other website that like a normal investor could look at where there is a good update on yarn and cotton prices? That you would have something on top of your mind?
At the moment, nothing is coming. Something comes up, we will inform you for that as well. But cotton prices are getting updated very regularly on the Cotlook index. You can have a look at Cotlook index.
Yeah. Cotton is actually not the issue. Cotton is not the issue. Actually, it's on the yarn side, which is a little. You have to look around, and you eventually don't find a good source. No problem, sir.
Yeah.
Okay. Thanks.
Thank you. We would request participants to limit your question to one at a time now. The next question is from the line of Chirag Lodhia from Value Quest. Please go ahead.
Yeah, thank you for the opportunity and congratulations on good set of numbers. Sir, my first question was, how would our average cost of carrying cotton would have changed in this quarter compared to last quarter? Because as I remember correctly, you carry 3 to 4 months inventory on a rolling basis. So compared to this quarter, Q2, your carrying cost would be higher. So what would be that change?
Carrying cost in this quarter will rather come down because normally at the end of the season, we reduce our inventory because we are expecting the new cotton which will be at lower price. So that is so accordingly we start to taper down on the inventory side by second quarter, and then again in the last quarter we again start to build up our inventory. So from August, September till November, December, normally our inventory carrying is lesser.
So what I'm trying to understand is in Q1, your average cost of cotton would be say 100 rupees. So in Q2, it would be higher than 100 rupees, right?
Yeah, of course it will be higher because prices have been increasing and we have been buying during Q1 as well. So of course the prices, the increasing effect will definitely be there. Some increase in the cotton cost will be there.
So will it impact margins in Q2 then compared to Q1? That is what I'm trying to understand.
As of now, we do not see any major impact because we are also doing rolling basis as well. We normally operate with 1 year, 1 month and 3 month contract. So we were also fulfilling our old. This quarter we are also having new contracts, increased prices as well. So we should not majorly, as of now, we are not seeing any major impact on the margin.
Got it. And just sir, secondly, at the current capacity and current prices, what can be the peak turnover you can achieve eventually at the optimum level?
It means it's, of course, subject to the prices. Means we need to look at.
That's why I said at current prices.
Yeah, current prices is one major factor which is there. At current prices, we should be at least be doing more than 600 crores.
Per quarter.
Per quarter.
Got it. Thank you. And secondly, what is the reason for repayment of debt? So till last quarter you were saying that you will repay as per schedule because your average cost of debt is quite low. So what has changed? I mean, why you are repaying more?
First of all, there are certain small loans which are not having the benefits of any interest subsidies or interest benefits. So that will have to be paid up. So that we want to pay them up, first of all. Second is the routine payment is also there, which we are also paying up. And thirdly, we are parking our excess accruals in our working capital, which is at a normal cost, which we are again reducing. So we are getting ready for the next growth phase. So once this money is actually available to us whenever we want to, since these are parked in our working capital limit. Once we are ready with our plans, then we can deploy the money accordingly to in those areas.
Tax rate for this year and next year?
Pardon? I cannot hear you.
Tax rate, income tax rate for this year and next year would be?
This year is, of course, is about 35%. And next year, definitely we expect with the kind of our MAT credit which we have, we should be able to take care of this during this year. And next year we expect that we should be back 25% level.
Okay. All the best, sir.
Thank you.
Thank you. Request participants to please limit your question to one at a time. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So as you said, sir, this year we will not be expanding too much. So out of our, is there any chances of doing debottlenecking, and how much can we increase our revenues by debottlenecking?
Revenue definitely is a function of price and the quantity. I can guide you about the quantity as
I meant volume, sir, quantity. Sorry.
Yeah. So volumes we are going to add about 5%, 4 to 5% we are trying to add up. 4% definitely is getting add up. So, and we are looking at other areas where we can further increase our capacity within the existing equipments and existing facilities. So that is what we are looking at the moment for this year.
And second, sir, do you feel that having a very strong yarn ecosystem in India from a very long time, and having very strong suppliers also has also helped India in really getting ahead of Vietnam and Pakistan, etc.?
Definitely, India as a country has excelled pretty well in yarn business. We are leaders in the yarn business. We control nearly more than 30% of the world market share in this business. And being a very consistent players and quality being produced of top notch has also helped us. Further, in past 8 to 10 years, most of the machinery manufacturers worldwide, inclusive from various parts of the world, have shifted their bases to India. And the latest technology is also getting available, being produced in India as well. So, and this is also helping our spinning industry to equip itself much better than what it was maybe 8-10 years back. So that has aided to, so this has given a consistency. Also, the cost factor has improved for us. We are quite cost efficient in terms of capital costs as well as operational costs vis-a-vis various other countries.
And I think this PLI scheme, if it comes through, could be the biggest game changer.
Yeah, of course, PLI is not going to come in specifically for all kinds of products in the textile arena. They will be focusing on the areas where we are lacking, especially as they have mentioned that they will be focusing on man-made fiber, certain technologies in the on the side which we have not taken up, certain products which we are importing at the moment. And this could be a major, like the view will be changing. At the moment, we are looking at what we can export out of our country. What is our strength? Then with this PLI, I think the major change will happen is whatever is getting imported inside our country, if we can replenish them. And it is not a small sum. We are seeing that the imports of textiles, fabrics and others is to the tune of $3 to $4 billion at the moment. So this $3 to $4 billion can easily be captured immediately. Plus the garments also we are getting imported from the likes of Bangladesh and Vietnam and China as well. So that is another $4-5 billion. So this is a large chunk which we can capture within our country. Plus our growing population, increasing consumption, that should all help the growth of the textile industry.
Thank you. I would request Mr. Hawa to rejoin the queue for follow-up questions. Due to time constraints, we'll be able to take one last question, which is from the line of Ayush Mittal from Mittal Investments. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah, you're audible.
Yeah. So, first of all, congratulations on a very good performance. I had some couple of questions, like a follow-up in reference to earlier discussion. So one thing wherein you have said that this year the Capex requirement is low, while we are waiting for more details for government for clarity on scheme to do the larger expansion and Capex. Can you share some thoughts as to what quantum of debt or Capex are you comfortable on with the current size of balance sheet? I'm asking this question because we have seen in past that the textile companies go through wild swings. So how has the thought process evolved for the management, and what kind of debt levels are we okay with?
Like as you can see, we have been growing steadily by borrowing money as well as raising capital. For last growth path, we have done in the mix of both. As you know, this is a capital intensive industry, and we need capital to grow. So that means definitely we will need borrowed money for any major manufacturing activities to grow substantially from here. Now, so definitely that will be the path going forward. We wish to grow with the same pace what we had done in the past few years. It's just a pause, and we definitely will be looking to various areas. And we are in good areas. We are still about 300,000 spindles. We can go much farther from here because still we have a lot of capacity can be put in this area. Weaving is still a new business where we can still grow. Knitting business is doing very well, and that can be further grown into various areas. So the capacity can be increased substantially. Now, we have to balance our loans, how much debt we can take in our balance sheet, and what is sustainable. So that is, we have always been prudent in doing that in past as well. So for that, we consistently look at the cost of our borrowing. We have been borrowing at a very cheaper cost, especially for our Capex. For working capital, it is normal, but for our Capex, the borrowed cost is very, very less in the tune of 3 to 4% level. So if we considering that, we do whatever expansions we do, normally we do it very prudently and try to go into areas which has a good demand and the cycle is working for us. Looking into all those things, we would be comfortable to grow, means at 1,000 crore debt is a comfortable debt level for us. At the moment, at this point of time, we are at about long-term debt is about 675 crores, which we will repay 50 crores during this year. So we'll be at about 500 crores. So we'll be okay to go in for an additional debt of about 500 crores going forward easily. And plus, so this kind of growth is possible for our.
Thank you. We'll take the last. Sorry, go ahead, sir.
Yeah. So my question was, you already have the land and infrastructure in place, or you will need to invest into land and get clearances and everything?
We already have sufficient lands available with us for a reasonable growth, and infrastructure is all available. Small pieces of land may be adjacent to us, may be required. That is not a major concern.
Okay, sir. One more question, if I may squeeze in. What was the realization in this quarter, and how are the prices currently? Like, we have read some articles wherein the recent price increase has been very high in international US cotton and yarn. Can you share something on that?
Like realization part for the cotton yarn, you're asking for the cotton yarn?
Yeah, for your end product.
Yeah, cotton yarn prices were about, on an average basis, was about 315 rupees a kg for this quarter.
How much?
On that. Major price increase which has happened in this particular quarter, we are not seeing any major increase in the yarn prices. It is to the tune of maybe 3-4%. And raw material prices have also, means whatever increase has happened was primarily at the end of June or maybe in the beginning of this quarter itself.
Okay. Got it. Thank you.
Yes.
Thank you. We'll take one last question, which is from the line of Jinesh Shah from Kongu Commodities. Please go ahead.
Yeah. Hi. Thanks for taking my question. I would like to know what would be the percentage of cotton versus the other fibers that we use.
We are using about 90% is cotton and 10% is other.
Right. And what would our order book be like right now?
Order book at the moment is in the range of about 400 and I'm talking as of today, would be in the range of about 400 to 450 crores, 425 crores.
Right. Thank you so much.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Avnish Chandra for closing comments.
Dinesh, just one last thing. We have talked about growth things, which is our plans and all. I just wanted to know what is the big picture for 2-3 years. Like, we are already hitting 550 crore run rate for the top line. So it means we are already at more than 2,000 crore top line on yearly basis. What is the vision to make it 3,000 crore? Any timeline on that, of any tentative plan which you can share with the investors?
Avinash, first of all, let me thank you for hosting this conference call. And on this part of growth part, definitely as you have watched and tracked our company for long years, you know we have been growing very consistently. And our endeavor is to grow at the same pace. We would definitely, our expansion plans are in working. We are definitely will be expanding our capacities on the spinning and as well as on the side of our downstream processes. So in next 2-3 years time, we will be, as I explained in the last question, that we are comfortable taking loans to the tune of about 500 crores and plus our own internal accruals put together. We would go in for a substantial expansion path. Of course, that where to go in for which areas to allocate the money is something which we are looking forward, and we are looking if we can get the good government benefits out of it. Means it has been we have taken advantage of PFS majorly. We have also taken the advantage of the state incentive which has been offered to us. We also want to take advantage of things which is going forward. So looking into that, considering that, we will definitely go for an expansion. And as you can extrapolate our past numbers to see where we would be 2-3 years down the line. We'll be looking forward to the same kind of growth path going forward as well.
Okay, sir. Thank you very much, Dinesh sir and Maheshwari for spending your valuable time and providing us this opportunity to host the call. Yeah. Margaret, over to you.
Thank you. On behalf of Miss Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.